fellow traders expect activities at the treasury bills market to wane today as investors take profit to fund obligation. Meanwhile, the Naira depreciated at the investors and exporters window to close Thursday at 775 Naira 20 Kobo to the greenback. Dimeji Obasa, a fixed income dealer at Access Bank, joins me now for an update on the fixed income markets here in Nigeria. Thank you so much for your time, Dimeji. Let's first backtrack to how the market has fared this week. It's the first trading week in the fourth quarter. What are sentiments like?
Good afternoon. Thank you very much for having me. What we've seen this week has been reinforcement of market sentiment across board. While we've seen bullish sentiments on the treasury bills curve, with local market participants looking to reinvest some of the excess liquidity in the system across the bills curve, particularly on the shorter end, we've seen bearish sentiment on the bond curve. This was reinforced by the release of the bond auction calendar by the DMO, where we saw that they were maintaining not just the bonds that were on offer, but also the amounts on offer, maintained at a range of 80 to 100 billion per security for each of the months that they will be holding auctions. So that just tells us that on a monthly basis, at least on the lower end of the range, the DMO is looking to borrow about 360 billion. So that reinforced the market's bearish sentiments across the bond curve. So that's basically what we've seen for the week so far.
Now let's get to the currency and what the developments at the INE window.
At the INE window, we've still seen demand significantly outweigh supply. We saw that rates closed yesterday at about 775 levels. We do not foresee any significant change as of yet. We still have some flows coming in, but it's nowhere near the level of demand that we have in the market currently.
But taking a bird's eye view of the market and making projections into the fourth quarter, what do you see in terms of dynamics playing out for FX demand, bonds, and even T-bills?
Okay, so on the FX side, the demand will remain. The supply would be dependent on some of the policies that the new CBN regime or the new CBN leadership would then roll out. We are hopeful that the international market will be favorable to, or rather will favor some of the policies that we expect that they come up with, and we can start to see more supply come into the market. So for now, we will just sort of hold on for further guidance on what the outlook would be on the FX side. On the fixed income market, we continue to expect bearish sentiments, at least going into the rest of this month, particularly on the bond side. While on the bills, we would foresee that we expect that we should see some bullish sentiments, particularly on the shorter ends of the bills curve. Essentially, what market participants are doing is to reinvest the excess liquidity in the system on shorter tenured bills, just as a way to hold the cash while while the expect yields to increase further in the bond market.
Yeah, because liquidity has also been an issue playing out almost all the year, even more also played out quite significantly in the third quarter. What's your outlook for liquidity going forward?
Outlook for liquidity, at least going to the rest of the year, is positive. While during the months we would expect liquidity to thin out towards the end of the month as the federal government's allocation committee disburses their allocations for several state governments, sort of would boost liquidity in the system, particularly amongst banks, amongst other market participants as well. On a monthly basis, asset managers, pension fund administrators also get inflows, which they typically would channel into the fixed income market.
Yeah, so, positive you say in the medium to longer term then. But in terms of this week, we saw those CRR debits kick in, and how did that play out for the markets?
Again, that just reinforced the bullish sentiment, the bearish sentiment rather, in the market. We saw a significant CRR debit hit the system on Wednesday. That then made more market participants look to just stay on the short end of the curve, so that in the event that they need to meet any obligations, they are able to quickly liquidate with very minimal price impact.